Welcome back. Time to have a conversation with Sylvain Charlebois. He's director at the Agri-Food Analytics Lab at Dalhousie University. He joins us from the Greater Halifax area. Sylvain, thanks a lot for joining us. You and your team have published a new report on public perceptions of food inflation, and it shows growing anxiety around food affordability. So my first question is, haven't Canadians been anxious for some time about the affordability of food? Inflation on a headline basis was running at 8% in the middle of June of 2022, and that's when food prices appeared to be going absolutely through the roof. Increases in food prices have declined substantially since then. What are your thoughts on this ongoing anxiety that Canadians have about food pricing?
Well, first of all, thank you for having me. The problem here, Paul, is that the food inflation rate is actually about 1% above general inflation. And when that happens, typically people will notice higher food prices. I think that perceptions are a little exaggerated. A lot of Canadians are expecting double-digit food inflation, which is highly unlikely. But food inflation is well above 3%. We do expect that percentage to increase as a result of what we've been seeing in retail, in particular, pivoting away from America as a primary source. That will actually cost more for distributors to get food into Canada. And so we are likely going to see that in April numbers, May numbers as well. Another
fact is that it's important to remember, of course, that food prices have not, on balance, come down at all since the huge run-up in 2022. The pace of increases has declined, and as you know, the pace of increase is still ahead of overall inflation. Is it realistic for people to expect food prices to actually come down during some periods of time, to have food disinflation?
No, because the cost to operate, the cost to distribute and retail food have gone up. You talk to retailers, you talk to restaurant operators, they'll all tell you the same story. It's more costly to operate a business right now. Although there is some anxiety around food inflation, the big winners, I think, coming out of this report that we released this week are independent grocers. There is this Buy Canadian movement. There is some momentum around local foods, and that really has allowed independent grocers to flourish. There's more attention given to independent retailers now than 6 months ago, which is certainly welcome news, especially for processors who are trying to reach Canadians. It's harder actually to reach Canadians if there are no independents in the system. So independents are being quite supported by Canadians looking for local solutions.
You also say that independent grocers are gaining in public confidence. Is this the flip side of the open hostility that we've seen at times? And we're looking at graphics on our screen right now at the likes of Loblaw, at the likes of Sobeys, Metro, Walmart. Those are the big four corporations that sell food in Canada.
That's right. This is really the interesting part of our report, because 6 months ago, a year ago, some of these companies were not trusted. Now they're way more trusted, and people don't necessarily think much about inflation. They're thinking more about protecting Canada and food sovereignty as well. That's driving a lot of decisions at the grocery store right now. And so people are less concerned. They're still concerned about inflation, but not as much as 6 months ago, but they're more concerned about what's the rhetoric coming out of the White House. And in reaction to all that, people are buying more Canadian food products, which is really interesting. And it really has happened pretty quickly. So for grocers to pivot and find new sources was incredibly challenging over the last several months.
And grocers are making the effort, aren't they? They're putting signs on their shelves saying this product is made in Canada, correct?
That's right. Canadians may not appreciate that what you see at the grocery store today was planned months before, right. Probably in February or March. So to actually pivot very quickly is almost a miracle. They've done a good job. Of course, they've Canadianized grocery stores, or most importantly, they have actually de-Americanized grocery stores very quickly, because that's what Canadians were expecting.
How prevalent is the use of coupons now in grocery shopping? Some of my younger colleagues here at B&M Bloomberg have almost had to take me by the hand and show me that coupons aren't, you don't use scissors anymore to cut them out of a brochure. There are apps now that actually have coupons in them.
It's all digital, absolutely, Bulk. Welcome to the 21st century. but what the one thing, the flavor of the month right now, yes, coupons are still there, loyalty programs, very important. But the flavor of the month right now is bulk buying. If you do have space at home, people are bulk buying way, way more to stretch those dollars. If you look at our report, you'll notice that Canadians are spending basically the same amount of money now than 6 months ago, retail. And so to stretch those dollars, they're buying bulk.
And does that work? Does your research show that bulk pricing is cheaper than smaller unit purchasing?
Yes, most of the time. Not all the time, but most of the time you will get good deals, and people are noticing those deals. What's interesting is in food service, it's the opposite. People are actually spending more per capita in Canada, about $8 more than 6 months ago. So so retail sales, food retail sales are pretty stagnant in Canada, but when it comes to service, it's gone up almost $200 per Canadian, which is interesting. So people are spending more at the restaurant due to higher prices mostly. It's not because they're going there more often.
Sylvain, always so interesting to touch base with you and the findings of your research. Thank you very much. Sylvain Charlebois, Director at the Agri-Food Analytics Lab at Dalhousie University